Welcome to my May 2023 update on the best paying savings accounts here in the UK. And there have been some huge movements upwards on most types of savings accounts. And I will take you through them in this video. First of all, let's get a bit of a bigger picture stuff on what's been going on with inflation and the base rate. Well, the inflation rate, the most recent figure we have, has seen it fall slightly. It's now at 10.1%, which is still much, much higher than I think people were expecting it to be at this point. Still, the anticipation is that we will see inflation fall down further, potentially get below 3% at the end of the year. We will find out more details from the Bank of England when they have their Monetary Policy Committee meeting on the 11th of May, which is a week on Thursday. That is where they will set out what they think is happening to inflation, and they will also there share with us what they're going to do about it in terms of the base rate. Now, I will do a full video taking you through that on Thursday, as I always do when one of these meetings happens. But it kind of looks like the expectation is right now we will see another increase from 4.25% to 4.5%. And that is part of why we're seeing the rates I'm going to take you through in a moment increase, going up again. Not always. That's not the only reason. Some of them will have been increased because they're responding to the base rate increase we had back in March. Some of them will be pricing in already the one that's going to happen, potentially going to happen next week. But some of the increases are also people trying to be at the top of the table and kind of get that market share or make a name for themselves. But that's where we are in the kind of bigger picture stuff. Let's look at the actual accounts now. And let's start with easy access accounts, because a mini battle took place. If you saw my update at the beginning of April, you'll know a couple of days later, I had to do another quick update because we'd seen My Community Finance, Tandem and Chip all boost the rates from 3.4% was the highest to a 3.56% high, which was great. We've now, at the end of last week, seen another kind of little spat breakout with Shawbrook Bank offering a 3.65% easy access account, which was a big jump from what they previously offered, and then Chip responding with 3.71%. So that is where we are now. The target for your easy access savings accounts, 3.71%. And in fact, there are a total of 11 different easy access accounts paying more than 3.4%, more than the top rate just 1 month ago. So lots and lots of choice there. And there are a number below that as well have increased their rates bit by bit, bit by bit, bit by bit. So a huge number of them pay more than 3% now, 3.1, 3.2. I would say 3.3 really should be a kind of a just cutting point right now. If you're getting below 3.3%, especially if you're getting significantly below that, then look at moving your money. If you're at 3.3, it's still worth thinking about going to 3.71. That is still a nice, healthy distance between them. But certainly time to be thinking about, can you get more for your money? Again, these increases we're seeing right now, really good option, really good time for you to go back, look at what you're getting. And instantly on that, just because I might take you through some accounts now with higher rates, I might not even mention some of them, but if your rate has increased or your provider has increased the rate, do check you are getting this. Marcus, for example, they've just increased their rate to 3.3%. Not top of the table, but not bad. But you have to go into your online banking or app and activate a bonus to get that rate if you're an existing customer. So again, do just double check that you are getting what you think you're getting from these providers. Let's have a look, shall we then? Take you through the full list from over on the blog. Remember, becleverwithyourcash.com/savings. This is my website where I update once, twice, sometimes 3 times a day, the highest rates across all the big savings accounts. So if you want to make sure you know the latest ones, you can obviously watch my video next month or head over to that page and see what has changed. But here's a quick summary of the top paying ones. Right at the top, not a full easy access account because you do need to have a Barclays current account with Blue Rewards added on, and you are limited to earning this interest rate of 5.12% on balances of up to £5,000. So not on large amounts, but that is still the best paying one, and you can easy access. You can take your money in and out of it anytime. Just make sure you do read up. I've written about it before on the blog. I've spoken about it here on the YouTube channel. Make sure you are aware of all the requirements for that Blue Rewards add-on to the Barclays current account. But below that, let's have a look at what has changed. I've taken you through some of them just now. So we do have Chip at 3.71%. Don't forget there is a £50 bonus available if you enter a promo code. Details of that over on the website. However, the money has to stay in there for 6 months. You might be better off just going for a 6-month fix and get a higher rate of interest. But I'll take you through those rates in a moment. You've got Shawbrook Bank at 3.65%, My Community Finance 3.56% on balances over 20k. So you don't want to have less than 20k in there because otherwise it can be easily beaten. That, by the way, is a credit union. So again, slightly more of an ethical option for you if that's something you're keen on. Investec, 3.51, Tandem. I won't go through all of these. You can see them there on the list. I will pick out a couple of them. Again, talking about ethical savings, Family Building Society. Building Society is generally a good shorthand for ethical savings, 3.4%. And then we also have one right at the bottom, a bit of a gap there because there are other accounts paying between 3.3 and 3.4%. But you'll see I've got Leeds Building Society, limited issue online access, 3.3%. This is an easy access account, but what's different about it, not necessarily saying it's a good thing, but what's different about it is the rate is not variable. It is fixed. So you will be guaranteed to get that for about 13 months. So if rates do start to fall down and maybe other easy access accounts do start to drop down as a result of that, that one will not. Conversely, if rates do improve and already you can beat 3.3% with those accounts listed above, then you won't get more than that. However, because it is easy access, you are able to take your money out of it and put them into a different account if you wish. So the rate is fixed, not your access to the account. Of course, there are many, many more here. You always comment, what about Zopa? What about Atom? What about Crew? What about Chase? Now, they may well increase their rates in the next few weeks. As I say, there is a Bank of England meeting in just a week's time. Some of them might improve in anticipation of that over the next few days. Some of them might wait and do something after that when they know what has been said. Whether they will suddenly be in this top sort of, 10 different savings accounts, I don't know. But if you are maybe on the threshold, let's say you have got, a Monzo account 3.2, Chip at 3.1, you might want to wait and just give it a couple of weeks and see if they do increase their rates to something which is much more competitive nearer the top of that table. Certainly in the past, we've seen Tandem and Synergy and Crew and Al Rayyan all boost their rates and try and be near the top. So there may well be that they nudge up. So you might not want to leave those just yet. But again, you can always move your money back. The issue with that, when moving money back and forth, is obviously a little bit of admin time. You have to work out whether it is worth it. It depends how much money you've got and how much money you're like to make by those little incremental increases as we go along. So that's easy access. Let's look quickly at notice accounts and regular savers as well. There have been some big movements with notice accounts as well, as you can see here. DF Capital, 3.95% on 120 days notice. DF Capital again, 3.9 on a 90-day notice. Well worth thinking about those if you don't need to access your cash instantly. They are still, I would say, significantly above where we are on easy access rates that you hopefully wouldn't miss out on a 3 or more 4 month period. Below that, I wouldn't bother with a 31-day or 7-day notice accounts. Currently, the best ones are with Zopa. That could change. I would imagine Zopa will be trying to improve their rates at some point in the next few weeks. No guarantee, but if they do, they could nudge up. Again, with any of these things in notice accounts, you kind of want them to be higher, as with the limited access ones, than the easy access accounts, and that isn't the case right now. No change with regular savers. I'll give you the list here just for completion. So if you are looking to get one, you can look at the best ones. Top ones still require a current account. So First Direct, 7%. Club Lloyds, 6.25%. NatWest at RBS, 6.17%. Bank of Scotland, 5.5%. And Lloyds, 5.25%. The only one there is that one in the middle with Halifax, 5.5%. That's the only one that does not require a current account. What is interesting right now, and it's worth checking out my latest current account video if you haven't seen it already, came out at the weekend, is there are some bank switching offers and some other freebies for many of those accounts. So it may well be that you get some extra rewards, some money, Disney Plus for a year, whatever it might be, plus access to those regular savers by opening up or switching into one of those different current accounts. Now let's go on to fixed rate savings, because this has been an absolutely huge increase today from one provider in particular, IS Bank. You can't get these rates direct from them. You have to go via Raisin. Raisin calls itself a savings marketplace. Basically, you can open up an account with them, and then once you do, you have access to a number of other savings options from various different savings providers. Sometimes they are exclusive rates that you'll only get via Raisin. You won't get them direct from the provider. Sometimes they're on both. But in this particular case, you have to go via Raisin to get this. And they have got for 1 year, 2 year, 3 year, 4 year, 5 year, 6 year, and 7 year fixes a rate of 5%. An absolutely massive increase on where we were just 1 month ago. I think the top one was around 4.6, 4.61%. So a big jump from there. Below that, we have seen other increases as well. There are about 3 or 4 different accounts offering between 4.8 and 4.85 on a 1 year fix, and a bit lower than that, but similar ones on the 18 month, 24 month, and so on. So you might be tempted to give one of these a go, or one of the other ones that are listed over on the blog, becleveryourcash.com/savings. If you do that, just bear in mind that often these accounts pay their interest in one massive lump sum at the end of the term. So if it's a 3-year fix, you might get all that interest paid after 3 years. Or even if they pay it earlier, you might not be able to access it. And this is the important thing. As soon as you can get that cash, it counts towards your personal savings allowance. And if it is all at the end, and if we are talking about a longer length of fix, particularly those 5, 6, 7 year ones, but especially 3 and 4 years, 2 years the same, enough money in them at those rates means that when they compound year on year, because you're earning interest on the interest, you will go way over your personal savings allowance. Absolutely. Now remember, I have got a whole video taking you through the PSA, so do watch that if this is new to you. But this is how much interest you can earn in a year tax-free. If you're a basic rate taxpayer, that is £1,000 a year. If you're a higher rate taxpayer, that is £500 a year. Now, anything above those allowances, you will be charged tax on the interest you earn at the rate you pay tax. So that can knock 20% off the additional money above £1,000 if you're basic rate, or 40% off your anything over £500. That suddenly takes a 5% rate down significantly, down to 4% or down to 3%. Now that isn't necessarily a bad thing if you're thinking longer term. You know, if you think you're going to be over 7 years, to get a 4% rate is not bad, okay? But just do check this, bear this in mind. Find out when these different accounts, these fixes will let you access the interest. And in most cases, I say it will be at the end of the term. Okay, let's look at ISAs now. We are obviously in a new ISA season. So from the 6th of April, you've been able to put in an extra 20K for this financial year, if you've got it, into ISAs. Not going to be right for all of you. Go back to what I just said about tax on savings. Some of you won't need to because you can earn a higher rate elsewhere. And although we have seen movement in ISA accounts, it's nowhere near as big as those jumps that I've taken you through in the other accounts right now. But let me sort of take you through the top ones. Still, if you have a Yorkshire Building Society account and you've had it for over a year, you can access their Loyalty 6 ISA. That would be 4.25% on the first 20K you have saved. Obviously, if you transfer more 20K in from previous years, it does drop down into 3.75%. If you haven't got that, you can't get that. 3.45% is the best easy access account ISA from Shawbrook right now. Castle Trust leading the way at 4.25% on a 1-year fix. Santander 4.25% again, this time on an 18-month fix, while Newcastle Building Society has just come out with a 4.4% paying 2-year fix. You'll then see below that, longer terms, the rates do start to decline. But again, I've got more details to that over on the blog. What I will say is, though, there are a couple of offers that might be worth going for, even if the rate is slightly smaller. One of them ends today, right, on the 3rd of May. So appreciate some of you watching this later on, you will miss out on this. But if you open up a Coventry Building Society ISA via Hargreaves Lansdowne, operates in the same way to the Raisin account I mentioned just now. You open up an account with them, then open up this particular ISA. And if you put in £10,000 via debit card, so it's a lot to do in the next few hours, but then you'll get a £100 bonus. Appreciate that's not going to work for most of you, but some of you might be able to just get that in. And that £100 bonus could be better than going to say for something with a higher rate. That is an easy access account, or a limited access account, I should say. Whereas Santander are still offering a £50 bonus if you transfer £10,000 into one of their 1-year, 18-month or 2-year fixed ISAs. Again, not too far off the top of the table, not the top, but then that 50 quid might be worth nabbing. And incidentally, with ISAs, particularly fixed ISAs, but also with easy access, this is an interesting one where if you're after a big name, you want NatWest or you want Halifax or you want Virgin Money, they are actually relatively competitive. They're not necessarily always at the top of the table, but they are competitive. So that might put your mind at ease, or maybe you've already got existing accounts. You're not going to be losing out as much going for one of those as you would in a normal easy access or a normal fixed rate account. Very quickly there, you can see the top paying lifetime ISA hasn't changed since last month. Still 3.5% from Moneybox, drops to 2.75% after a year. I did a video just last week looking at lifetime ISAs and the best ones for this year. So check that out if you want more info on your options, including which ones accept transfers in. Last one to tell you about is around a prize draw account, and it is not premium bonds. That is still at a 3.3% prize rate. No change there yet. Obviously, they may well respond to these other increases we've seen. If they do, I'll let you know straight away. But this one is for Chip. They have a prize draw account as well. They have recently doubled the number of prizes available to you if you enter. It has changed slightly since when I first spoke about it last year when it launched. That time there was maybe a bit of a hack, a bit of a workaround to put your money in. That has ended. You now need to have an average balance across the month of at least £100 in order to enter this draw. And every £10 you have on average across a month will get you one entry. So there are now double the number of prizes. Still not a huge number though. We're looking at about 2,600 prizes. Not a huge amount. So your chances of winning are still very, very, very low. But the prizes are tax-free as they are with premium bonds. So maybe it's something to consider if you're someone who's worried about going over your PSA. Maybe use it alongside premium bonds. Personally, I'm not a big fan, but it's worth letting you know all about it. My name is Andy Webb. Thank you so much for watching. Remember, head to becleverwithyourcash.com/savings for the latest rates, or watch these videos here for more ways to boost your returns.